Titi Lola says, what's the impact of a low interest rate environment locally and globally competitive on investment options? What's the impact of a low interest rate? Okay, so the impact of a low interest rate, right? Number one is that it could actually impact on the investments, the returns that you get on investment. All right. It can impact on the returns that you get on investment. So if, for instance, the federal government says, okay, MPR, which is the the Nigerian benchmark rate, okay, MPR monetary policy rate, we want to reduce it. Most likely, the returns on other investments will go down. All right, the returns on other investments will go down. When they increase the MPR, right? Most likely, what they would also do is that the returns that they give on instruments issued by the federal government would also increase. Perhaps the federal government is using it to incentivize investors to come into, the federal government instruments and not invest in stocks, private businesses, and the whole 9 yards. All right. Let me give a classical example. In the US, the chair of the Federal Reserve about 4 months ago increased the interest rate on US Treasury bonds. That's what they call their own Treasury bills, US Treasury bonds, right? So when the interest rates, the yield was going up, many of the institutional investors and the people that determine the returns that you get on investments like stocks, okay, are the institutional investors. They're not the retail investors. The banks, the pension fund companies, the what do you call them? The insurance companies, right? Those are the guys that are actually going big. The guys that subscribe, majorly to the Sukuk are the institutional investors, not you and I. Of course, we buy maybe 1,000, 2,000, but the guys that really buy bulk, right? They are the institutional investors. So many of the institutional investors, they're moved because, they are managing funds of millions of people, and they want to be sure that these funds are put in safe, instruments. So they moved millions, billions of dollars into the treasury bonds. And that, of course, affected the returns on some stocks. So that's why you see, go and look at the charts now, right? Many of the US tech stocks have crashed, right? They've crashed, right? Because the institutional investors have moved their money. And, the returns that you get on tradable instruments like stocks, okay, is based on the market forces, demand and supply. Okay, so when people are demanding for stock, that's when the price would go up. When they're not demanding for it, the price would crash. All right. So that's the impact of low interest rate.